Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep. Same crew as always, Spencer Israel, Joel Elconin, and Dennis Dick. On today's show, somehow Procter & Gamble is finding himself at all-time highs. We're going to talk about that. We're going to talk about some key levels in Apple lows with some weird intraday guidance yesterday, causing some volatility. We're going to talk about tailored brands getting destroyed this morning, and we'll take your questions from our chat as we always do. Our guest today, Marc Chaikin from Chaikin Analytics. He joins us every other Thursday at 8:15. Joel, what's the word here in the overnight session?
The choppy trading action that we talked about yesterday does continue as the rollover continues. Front month contract now is March. That's age on your platforms. I'm still gonna quote Dees and do my levels on Dees. I will be changing on Monday. Your pre-market high stands at 26.70.75, middle of nowhere. Your pre-market low is 40.5, and that matched your after hours low. So important numbers on the downside. Wednesday's low at 31.75 and Wednesday's high at 86.50. I am predicting, and I've been predicting it for several days, I am predicting an inside day today. Crude is down 48 cents at 50.67. Now, crude has tried to rally, but now we are just slumping at the lows of the move. On a downturn, 49.41, 49.65, call 49.5, a three-star level in crude if we lose another buck. Gold really trying to hang in there at 12.50. We've made multiple highs just above that. But overall, we're down 3.30 here, 12.46.70. And silver, I don't even think silver never got over 15 bucks on that rally. High of the move at 14.90, but that's trading in the red by 6 cents at 14.78. They talk about John Inch at Gordon Haskett, and they talk about the analysts at JP Morgan. But let's bring in our number one General Electric analyst. Well, I guess
this was Spencer Israel's call.
I was going to say Spencer.
This was Spencer Israel's call here. I'll tell you that because he said to me yesterday on the pre-market show, did you know yesterday the low in GE was 666? And I was like, yeah, the financial crisis low was 666 too. Is this a coincidence or is this the GE bottom? Well, it looks like JP Morgan listens to the show because they upgrade the stock. We lost one of the key bears here this morning, and they're going to try to make that 666 the bottom. You know what? 749 here now is a good shot. It might be the bottom. So what a coincidence. GE looks like it might bottom at 666. And during the financial crisis, the S&P low was 666. That's your number. You know what? That's a strategy. Write that down. When stocks get down and they've been in these downturns forever and they get to 66, they turn. I don't know.
They turn with the triple bottom.
We laughed about it yesterday, but you know what? It's up 10% here this morning.
Holy
money, 11%.
What are you doing now, Spencer? What are you doing now? What are you doing now here at 7? Should we just sign off and just let Spencer do the show? I mean,
I wouldn't have noticed the low at 660. And you know what? I'm kicking myself. Last night it was offered at 669, and I was like, I should just buy a few just in case. Holy cow, I didn't. That would have been good. 748. GE.
Well,
wow.
They also had news this morning, so there was an upgrade, and they also
tell us everything.
Yeah, they also had news. They announced they're selling the majority stake in ServiceMax to Silver Lake, but no terms were disclosed there. They're also launching a $1.2 billion industrial Internet of Things software company on top of the upgrade from JP Morgan to neutral. They also announced a $6 price target. Did JP Morgan, and that's notable because, as we've said, there are two main bears that have been right all the way down on this stock. John Inch, formerly of Deutsche Bank, now at Gordon Haskett, and JP Morgan. Those are the two big bears from back in like May 2016. and they both rode this thing hard on the way down. And one of those bears is saying, not so fast.
The one of the bears is turning here and trying to call the bottom. So let's see if 666 is going to hold. He did put a $6 price target still on the stock. So I guess he's saying it isn't going to hold. But regardless here, the market is loving that we lost one of the key bears here this morning in GE. So that is important. Up 11%. I mean, am I chasing GE? You know what? You can squeeze it to $8. Not that there's a lot of short interest here, but there's a lot of people who hate on this stock. So I could see it. I could see a move to 8. I'm not chasing. I don't chase. But you know what? On pullbacks here, there's going to be people who want to buy GE now. So I put my bull hat on in GE. I got the bull hat on. 666 is the low of it. That's just my opinion. But I think it's thin. I think it's in 666. So it gets back down to low 7s. I might back up and buy some of this actually.
For a swing
stopping
trade?
Out at 665. The stop out at 665. Stop put at 665.
All right. A whopping 11,273,700. Oh, and it's going to be like 12 million here soon, folks. Yeah, the high of the pre-market session is 753. Really,
the market with it right now. We just went up 3 more points.
Yeah. The G is back. It's going to be one of the top 10 components in the S&P, probably by March here, being a little facetious. I don't see anything at the 750 level. It's kind of like a psychological level. Above that, 781, 795, $8 was in high. So just round it off. Vicky, it's $8 today. Whew, I think there should be a ton to sell for sale there. On a pullback, I mean, if you get a shot to buy this near yesterday's high, 703, that's where I would be looking. And Dennis, you mentioned that same level. You said if it gets into the lower 7s. So that would be the gap fill. Open will be very important in this one, Dennis, because there's got to be a lot of stock in the book. But with trading over 11
million shoes, all that gone. And they know why there's not a lot of stock in the book? Because it's been coming down through that area. So the only thing you have as sellers is people who have been flipping it and buying it. It's not like there's been eternal sellers here that haven't been done. It's been coming through. So there won't be, the book's chewed through. So there's going to be no book issues on this. I think there's room to $8. Do we get a shot back, on a little pullback? Maybe it's 7, 710. I think eventually we're going to test 8 on this. So I think 8, if I was making a bet, I would say 8 before 665. But I guess that's fair because 744.
Yeah,
I'll probably get you there.
All right.
Yeah. Buying this, I mean, would you have the chutzpah to buy this off the open?
Not up 11%. Okay, so sometimes you see some whipsaw action. So if we could get it back down like 710,
I got you. Okay.
I'd take a shot.
Okay.
I'll take a shot down there.
Okay. Wait, are you guys ready for this stat? I'm still going back here, but I got it. Okay. Today is so it's sub 11% this morning. Best day for GE since 2009. Best day for GE.
And it's basically just one analyst commentary. An analyst that didn't even go bullish, just not bearish anymore. So you can tell there's a few people who are like, well, we lost one. If we lose Inch, and we were talking, you emailed Inch, we'll get him on the show. If he decides to go bullish, rah, GE.
Best day for GE since March 12th, 2009.
Wow.
And it's only 8:10. The day's young.
Day's not over yet. Right?
I think we're going to hold these gains. And not all of it, maybe, but I think we're going to hold above 7. So I don't think we're giving it all back. It's too. There's been too many people on the bear train. We just lost one of the key bears. This is big. It's big news.
All right. This is not the show sponsored by General Electric here. So let's.
Spinner's calling me out. Didn't he say $5? No, I changed 666. No, I'm changing today though. So I'm officially done with my $5 price target there. I moved it up to 8. So I changed mine too. Not that I give price targets. So it was a bit of a joke yesterday. So I'm not going to take credit for that. It was a joke yesterday where we said is the 666 low in, but we lost one of the key bears. So you have to. I'm a trader. So you have to always be able to change. So you can say 5 and like, no, circumstances have changed here. I think 666 is the low now. So, and I sold this thing at 14 because I thought it was going a lot lower. So I don't really think I've got this one wrong, But anyways, I'm just flipping the script. I'm going bullish on GE here, but not buying 750. Not chasing. All right. No chasing.
Let's talk about the biggest loser of the day, and that is Tailored Brands. Oh boy, the Q3 EPS last night, $1.01 versus a 94-cent estimate. Sales of $812 versus $829 million. So mixed earnings report. That's not the headline. The headline is the guidance. The Q4 adjusted EPS guidance came in at 24 to 29 cent loss, and they cut their fiscal year EPS guidance. They cut it by 5 cents from $2.35 to $2.30 on the low end of the range, but they are forecasting a big EPS loss for the Q4, and then they guided a lower fiscal year EPS, and that adds up to a huge decline today. If you own this stock, you're not going to like the way it looks. I guarantee it.
Nice, Spencer. Just drop the mic.
What, Spencer, when are you going to get like gongs and stuff on the show? Like when the special sound effects? Didn't we talk about doing that?
You want to turn this into the Gong Show? We can turn it into the Gong Show. I mean, I can gong myself off. That's fine.
Well, okay.
Guys.
Hey, Spencer, could you put me on the screen for a second here instead of the chart?
I can do that, yes. What do you want to say?
I want to say, do you guys like my shirt? It's like in general.
Is that Tailored Brands?
I'm asking you a question.
Is that a Tailored Brands shirt?
Yes, it is.
Look at this, Jill, representing. Do you always, how many Tailored Brand shirts do you own?
I got a lot of them. You know why?
How many did you buy last quarter?
I blew out the elbows in like 3 of them, and
so they're not good quality.
I had it for like 3 or 4 years.
Oh, okay.
Okay. All right. First of all, they're cheap. Like they're really cheap. Like you can get like 2 of these.
How much is that shirt that you're sporting right now?
Not very much. I think I got 2 for $80. So I think it's like $40.
$40 shirt right there.
Yeah. But you don't have to take it to the dry cleaners. You can just throw it in the wash. I don't have to pay.
That's what I like. I like those ones that get in the wash and come out. Non-wrinkle shirts. You get that. You put that non-wrinkle sticker on the shirt. I buy it. Exactly. I like that non-wrinkle. I don't like ironing. I never iron. I burn myself. I don't like ironing at all. So I want the non-wrinkle shirts. And not that I wear any dress shirts. I'm wearing a sweater again or a t-shirt. But if I ever was to get dressed up, which is like once or twice a year with a dress shirt on, then I wouldn't want the non-wrinkle ones. So I don't have to iron that once or twice a year.
I have some dry cleaning only shirts. You know what that means?
Like you would go to a funeral or something or a wedding?
No, I own dry clean. No, it means they're dirty. Is what that means. It means they're dirty. They're dry clean only.
Okay.
It means they're dirty.
All right.
That's not my job.
Okay. Anyways, Joel did not buy enough shirts last quarter, apparently at Tailored Brands here, because the stock is down 26% in the pre-market. These stocks going to whipsaw. It's going to be if you think it's going back to 20, it's not going to pull an AEO. I was wrong yesterday. I didn't think AEO was going to come all the way back. It did. This stock's down 26%. I'll bet you any steak dinner this is not coming back here today, Joel. Maybe we get back up into the 15 handle, but if you're buying the dip on stocks like this, it worked in AEO yesterday, but I don't think it's going to work 2 times in a row. I don't think it's working in Tailored Brands. Maybe we get back in the 15 handle, but this thing is ugly despite your beautiful shirt.
I really don't like the shirts that much. It's just that, could throw them in the wash and hang them up.
Well, I like the best
thing. Okay. 2 things here. There was a stock yesterday that was getting slaughtered. It was Play, right? Dave & Buster's. Yeah. And I was looking at it to pre-market, and I think, Spencer, you showed the 15-minute chart, and there was a buyer in there. I think it was like around, was it 42? 2.5 yesterday, and it just looked like it was 43. Spencer, if you could bring that chart up from yesterday, do you see between the pre-market and the after hours, it was real tight around 43, and to me that signifies that there's still sellers out there, but someone really wanted to own it. They either wanted to cover a short, and then you had, by the time we did the show and everything, it started to be on the rebound. But the intraday low was way up at 44.55. So I don't know if TLRD is going to pull the same trick this morning, but it's the same formation where you've traded down you have someone trying to bring some stock in under, right around this $15 area. And this is a huge move. So, if you've got a huge short on, or you're really anxious about, covering, getting long, trying a long on this, you may be buying at levels that will not be seen in the regular session. And that's just, I've seen this before. It happened yesterday. There's absolutely no guarantee it's going to happen again. Based on the monthly charts, 1457 was your low in November of 2017.
All right, we're running a minute late. We're going to take a quick break, and I'm going to grab Marc Chaikin from Chaikin Analytics. We'll be right back. And here we are now with out in Philadelphia. Marc, how's it going?
It's going very well.
All right. Last time we had you on 2 weeks ago, that was when we had a double bottom, I believe, in the S&P. And now in the preceding 2 weeks, 2 weeks, we've had another bottom. Do you see a quad bottom now, or is a triple bottom in, or what?
I think the triple bottom is in. Obviously, the markets are going to remain volatile. These 1% sell-offs from intraday highs or even from the opening are really spooking people. But when you look at the factors that drove the negativity in the market, and I'm starting from the premise that fear has gripped the market. Every headline is being interpreted negatively. So if you look at China and interest rates and maybe an inverted yield curve, that's really what's been concerning the market. And of course, the potential that corporate profits dip and we get into an earnings recession in 19. The Fed is pretty much off the table. I'm pretty sure that we know that the rate hikes are going to stop in 2019. China looks like we're making progress based on yesterday's news and follow-up this morning. So what's happening here is that you're in a period where the natural buyers have pulled in their horns. The algos that are programmed to read headlines, not even parse the news necessarily, picked up last week on a 3-5-year yield curve inversion. Nobody looks at that. And if you did look at it, you find out that 6 out of 7 times the market has a 20% gain over the next 2 years. That's a totally bogus thing. We've now got fake news in the stock market. Now, I'm not a big fake news debater, but clearly fake news has been part of the dialogue in the political arena. It's, I think, part of the dialogue in the stock market arena, because so many of these sophisticated hedge funds have programmed computers to parse headlines and blog posts and immediately put in sell orders, and the natural buyers have pulled in the horns. So yes, I think the triple bottom's in, but I do believe we're going to continue to have some volatility. If we can get above 2,700, I think we've got a shot to be closer to 2,800 at year end than 2,600.
Okay, so then let's say Powell comes out on Wednesday and then hints at potentially some rate hikes, assuming they raise it next week, and then hints at maybe 1 or 2 more rate hikes next year. What would happen then?
Well, I think right now the market is assuming 1. So 1 would be fine. I think and of course it also depends on the comments and what they're seeing in the economy. But generally their comments have been the economy is strong, and that's why I'm bullish on the stock market. You don't get recessions and bear markets when leading indicators are at their high and when the economy is strong. And this whole fear of rising interest rates, inverted yield curve, the 10-year is in the 285 area. It's not 325, where it peaked just briefly. And so we're in a a situation where, yes, interest rates are going to go up a little bit, but they're in no way, shape, or form affecting the economy. And the reality is that we had a record number of mortgage applications just reported yesterday. Why? Because interest rate fears have abated and rates have come down a bit. So I think that the two major fear drivers in the market are, if not resolved, certainly mitigated for a while. And then you just have to look at the economy, and people are guessing we're going to have either an earnings recession, which is what we had in 2015, because of the energy sector, or a real recession. Guessing with some indicators, as they say, that have predicted 10 out of the last 3 recessions. Now you have people without indicators predicting recessions. How do you do that?
So if we're feeling bullish here, are you more inclined to go into those like growth, high beta names, you know, the Netflixes, the Squares, the PayPals, the ones that flew higher in the past, you know, few years?
The answer is yes, but not in the names that you just mentioned. Netflix has a bearish power gauge rating. I think their business model is broken. I think it costs them too much to make new product. You know, you get a new series like House of Cards, which bombs, and eventually that ripples back. So Netflix, I'd be a seller on strength. Same with Facebook. I would buy stocks like Amazon and Google. They have neutral ratings in Chaikin, not bullish ratings. But I think this is where the money can safely be deployed. They each have their own niche. Google with search and advertising and AI and self-driving cars and on. And Amazon is taking over the home. We just bought the intelligent doorbell with the camera. And you can buy plugs for your home from Amazon for $25, probably should be $10, and plug in a light fixture and then just say, turn on the living room light without having to program a whole central system. You could do this before. So quietly, Amazon is taking over the home. You don't hear a lot of privacy concerns like you do with Facebook. And I think those two you can buy. I also see that Broadcom made a new high yesterday. Very strong move in Broadcom. So semiconductors are not dead. I also think you balance that with some of the stocks that are in favor, like TAP, you know, Molson's, maybe Symantec. And just to end this little thought, this is a good time to take some tax losses and swap into better names in the same industry group. People still have some gains from earlier in the year. If they don't, they can take losses and, in spite of the new tax bill, deduct $3,000 in net losses from their net income. So, for instance, in the beverage space, you've had Constellation Brands really take it on the chin. It was a big high flyer. Great opportunity to say, take a loss in Constellation, switch into Molson's, TAP. In the real estate sector, Macerich still doing poorly. You could sell that and switch into either Kimco or Simon Property Group with bullish power gauge ratings. So, I think it's a stock picker's market. You can't blanketly buy across the board. So, for instance, I wouldn't step into NVIDIA here. But I do think that you can do some smart things for your portfolio and also get some tax benefits at this time of the year.
Are we also then buying the banks?
Ooh, did we talk about that last time? I don't know what's going on with the banks. There was one article in Barron's last weekend. Banks are down on average more than 20%, and the fundamentals haven't changed. So just as you have with the stock market, you've had a PE ratio readjustment. And by the way, someone was just on CNBC from one of the major investment firms saying that this contraction in PE ratios is going to go on. And that's dead wrong. There have been numerous times in the last 40 years when you've had a big earnings year, like we have in 18, and PE ratios have contracted. And invariably, 90% of the time in the following year, which would be 2019, the market stages, it's like a rubber band, or it's been compressed, We don't need an expansion necessarily in PE ratios because earnings are still estimated to be up 7 to 8% next year. And if that's a reason to be bearish, then I just don't understand the market, because wouldn't you rather be up 7 or 8% than down 7 or 8? And so I think we're going to see a small expansion in PE ratios next year and rising earnings. So I think you got to look ahead to 19 and say 19 is going to be a decent year, not a barn burner, but a decent year.
I got to get your thoughts here on Procter Gamble. All-time high this morning. It just keeps on going. What do you do here?
Well, the reason you're seeing that strength, obviously, is because of the defensive nature of the market. So money has been flowing into utilities and consumer staples and real estate. The power gauge is neutral, but you've got heavy money flows into the stock. I think the stock is expensive. If you're someone who believes in selling on strength, our upper volatility band is around 96. You're within 2 points of it. Wouldn't be a bad time to take some money off the table. Here, look at the earnings, 441 estimate for 19 versus 422. So earnings are estimated to go up 5%. Why in the world would you pay all-time high prices, new high prices for Procter & Gamble? I don't get it. Yeah, it's a low beta stock. It yields 3%, but it's a 22 PE ratio for a company that's challenged. Gillette is being attacked by Harry's Razor. And packaged goods are being basically commoditized even more so by Amazon and Walmart and Target with generic brands. So I'd be a seller of Procter & Gamble. You know, Jim Cramer has been a big proponent. Apple has a bear yet, but he's been saying Apple, if it's a consumer stock now, you know, with music and subscriptions, opposed to hardware, should be selling at that 19 to 20 PE ratio that Procter & Gamble is, and Apple's selling at a 12 PE ratio. So I would be a seller of P&G here. Leave something on the table for someone else.
Mark, I just have one thing for you here, and I want to try and really be in that bull camp as well with you, but just the volatility here, for me, in order to get a sustained rally here, I mean, I just don't think we can have 60, 70, 80 point, average daily ranges in the S&Ps. I mean, is it possible? I mean, for the ranges to come down and for the volatility to come down and we start just nice little rally? Or do you think, you mentioned the fake news, the media, the tariffs with China, the Brexit, you think there's just too much, uncertainty out there for a low volume, sustained rally, or low volatility sustained rally?
I'll use an analogy from World War II. It's always darkest before the dawn. I don't know when volatility is going to abate. There is a little bit of ray of hope in that when you get back-to-back volatility days in the opposite direction, that tends to come near the bottom of a bear market. I don't think we're in a bear market, but if I knew when volatility was going to, abate, then, I'd be in a position to really time the entry. So in lieu of that, I think what you've got to do is not buy the dips, but buy the dives. You've got to buy those. I just coined that for you guys. You can quote me or take it as your own. You got to buy the dives. Dips aren't good enough anymore. So yeah, it's disturbing, but if you buy and you know where the good support are, and you're not bottom fishing stocks like Apple or Netflix that are making new lows, or the energy stocks, then I think there are some trading opportunities, and I think there are some good long-term bond buying opportunities. I'll give you one example. My doctor on the corner, my sort of gatekeeper, we don't need him anymore in Pennsylvania, has a good feel for the market. So when we were down 600 points, I had a checkup on Monday. I said, let me guess, down 600 points, you did some buying today. He said, yeah, I bought 500 shares of J&J. Said, so it's the most conservative stock in my portfolio. It's got the 2.5% yield. I mean, you got to do stuff like that. Now, that's not a stock that's making new lows. It's in the upper portion of its range. I know volatility has spooked people, but ultimately, all this bearish sentiment, heavy put buying by individuals, the sentiment survey is very bearish. You name it, the sentiment numbers are bearish. Ultimately, that's associated with a bottom, not a top. So you got to hold your nose and buy the dives.
All right, Marc Chaikin has been on with us from Chaikin Analytics. As always, Marc, thanks for the time and have a good week.
Good. And do we get one before Christmas? I don't think so. So Merry Christmas and Happy Holidays to everybody. And I think we'll probably do one right after Christmas.
All right. Yep. That's the case. Have a good one, Marc.
You too.
All right, Joel, S&Ps, anything of note?
Just hanging out in mid-range, Spencer. You know how I love my 50% retracements on the day, and we are just hugging it right now. Your mid-range on the session here is 59.25. That's exactly where we are trading right now. So we hold there. Boom. Let's go up and test that high at 2670.75. If not, that pre-market low stands at 47.50. Dennis, today is the day with the buy and balance in GE.
Let's go check it out. Yeah. You're right, Joel, today, because the 200,000 seller who's probably still there is being covered up by a lot of buyers. So it's 628,000 to buy. That's going to grow into probably the millions very quickly here. Obviously, already traded 18 million shares, so we know it's up 758. I'm saying $8. I'm still saying $8. I don't know if it gets there today, but that's my short-term target here, as I have moved my price target from 5 to 8.
I'm just curious, Dennis, here. What do you got out there for a market to bid offer here in GE? Because last I mentioned that 8 million shares have traded. So I just wondered, just to get a perspective, because we are incremental.
18 million now. 18 million shares.
Yeah. What do you got for like a bid and offer?
Oh no, it's 1 penny market. It's
a
tight.
1 penny market.
Oh yeah, GE is always a 1 penny market. Almost entire pre-market. It's very, very liquid. That's why I like trading it, because you can get in and out with ease. Bank of America almost always has a 1 or 2 cent spread as well, even in the pre-market. So, GE here, 758 to 759, it's no problem. Littered with bids all over the place. So,
really?
Even in the book here right now, just bids everywhere. And then there's the offers too. It's always liquid. GE is liquid.
Okay. No, it's just incrementally making new highs here. Current high stands at 760. Dennis is looking for that $8 level. Boy, if there's not a mound of sellers here at, first 781, 795, and then $8 on November 29th.
Maybe you can see it today.
You know what, though, Dennis, what if you just took a shot yesterday on like 100 of the weekly 7 calls? I mean, come on.
$8. I'd be holding until we got to $8.
You would be holding out for $8.
Not me. I'm the scalper. I'd be like, hey, ring the register.
You'd be out at 710 last night.
I got to talk to Jeremy News some more, because I don't hold my winners long enough. I'm pretty good at cut price, but very disciplined. But I don't hold the scalper at me. I mean, it's a short-term trader. I'm going in trades for nickels a lot of times, so that's why I'm trading so much. So just since we've been on the show, what have I made? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 13, 14, 15, 16, 17. I've made 18 trades since the show started. That was at 8 o'clock. So it's all scalping. I'm just doing all scalping. It's all short-term pre-market scalping. Around fair value, but kind of with my own sauce on it too. If I could buy something, like if I feel if a stock's been upgraded and it's only trading up 1%, I feel it should be up 2%, I buy it. It's all just in my stat herb stuff. Where I've, just through the years, I've come up with my own, I value things as to what the new value is, and the same thing with like Procter & Gamble this morning. We were talking about this in the pre-market, and it's a nice segue here. They are catching an upgrade from Bank of America here today. And we know the seller's been in there. We've been talking about the 95 seller. It is going to test this today. 95, 300,000 shares in the book. I think it takes it out. And what I was saying is it's getting a running start. You were arguing with me, well, it's not getting a running start because it closed at 94.03, so it's already out. But the way I see it, I've valued Procter & Gamble at 1% higher here now because of the upgrade. So the new fair value for Procter & Gamble is not the close of 94.03, not adjusting for S&P or TLT movements or anything like that. It's probably 95-ish because of the upgrades. So now you have a running start. It's probably going to open up right below there because it's not taking out 95 in the pre-market because it would take a lot of stock to do that. But can it take it out in the regular session? I think it probably does. I think it probably falls here today, and Procter & Gamble does indeed make the new high and take out the $95 level. It tried it once back in November. It tried it 3 times here in December. This is like the 5th shot at it, and it's got the upgrade helping it here. I think 95 goes today.
You think it closes over 95?
No idea what it does after that.
Okay.
So.
All right. Well, I mean,
I think.
Yeah. Okay. I mean, just different opinions make different markets. And I just think, to me, a running start, would be, closing at 94.85, tight range yesterday, opening up near there and then running through it. But hey, you know what? If you're short this thing, which I tried several times on the way up, and I think I'm still positive on the trade just because I just cut it out. I mean, where else are you going to find a 300,000 share offer?
They're going to lean on it again. You can see there's people leaning in the pre-market 94.89. And what we mean by leaning is there's a huge offer in the book, and they were leaning on that for protection, saying, I don't think it's going to have enough stock to take out the 95. I think it's going to. I don't think it's going to pre-market. So I think, the people who are selling a pre-market, I think that if they get out pre-market, they'll be okay. I think if they hold it too long, they could get caught here, though, because I think the 95 could go very quickly once the regular session and the real volume comes in. It just takes one institution to come in, and now it's 1 million. So it just grew. 95 has 1.1 million shares there. 94.90 has 130,000 shares. So it takes, literally 1.5 million worth of stock to take it through the 95. And, you could say, oh, well, how do you know to believe that? Well, we've been looking at the seller in the book there for a month. So, and they were there every day. It's believable. That order is, 99.9% real. So, and that's why I like looking at the books in the pre-market, because you do see a little more of the real stuff. During the regular session, you see HFT envelope orders, market making orders, a lot of stuff that really covers up the real stuff. Pre-market, you see the real stuff usually. And it is littered with offers from 94.90 to 95. That is still resistance until broken, but I think it could take it out today. That being said, if you're trying to short a pre-market, at 94.89, I don't think it's a bad play. Maybe you can come in and get bought at 94.70. But I think if you stick around too long here, you could get burned. So just be careful if you're playing it short off at this time, because we have a catalyst to take out that 95 seller today.
And just, keep an eye on it too, because whoops trade, where they go in, they take out the 95 offers. It goes like 95.05 bid. If it's like that 95.10 bid, 95.15 bid, boom, someone could just come right back down and just clamp it at 95. So, if it does, it's a, one potential trade when it goes up through big size and then there's not enough buyers to continue, or, people like, okay, I'm going to buy some of that at 95. I'm going to flip it out at 95.10 on 10,000 shares. A lot of people may be thinking that. So, it's an interesting discussion here. Only 39,000 shares have traded here on the Bank America upgrade. Let's talk pot stocks a little bit, Dennis. Some of our listeners in the YouTube chat have been asking. We got NBEV on the move today.
Yeah.
What do you think? What do you think, NBEV?
Well, it's on the comeback trail, and you know what? It's been finding a bid. A lot of the pot stocks have been finding a bid the last 4 or 5 trading sessions, basically since Kronos caught that investment. You look at the last 4 days, Kronos has come back in, but the other ones have been sneaking higher here. If you're looking, maybe that's just speculation that maybe they're going to catch an investment from one of the big dogs too. I own Aurora Cannabis. That's the only one I have. I stuck it in the swing trading portfolio. It's been working. I'm up in it now. I was down in it for a bit, but starting to look like a little bit of a breakout there. But short leash on that one as well. Afria's got its own issues, so we'll just stay away from that one because we don't know what's happening, with all the allegations that were made. But if you look at all the other ones, like CGC is, Tilray is actually, I'm going to take that back because Tilray broke down. So it doesn't look nearly as good. Tilray doesn't look good at all. But Tilray is been one of the bigger ones too, one of the more widely traded ones. I guess just Aurora Cannabis Net.
I think the InBev thing has to do with the passage, or from I've read, it apparently has to do with the passage of the U.S. just passed a big farm bill. I don't really know how the two are connected because the Farm Bill, it's like an $860 billion bill that basically just provides like safeguards for U.S. farmers and subsidies. I don't know how that's connected to beverage companies, but they're saying it apparently is, and it's good news for them. Don't know how it's the case, but I think there was a connection being made between the InBev and this massive $800 billion farm bill that just got passed.
I mean, it's a Momo stock. It's a Momo stock. So it gets the momentum going on one side, it goes for a while, and then it turns and goes the other way. So straight down October, November, finally, caught a bottom. They're around $3, which is, not quite. I thought it might eventually get back to the 2. It didn't quite get down there. And obviously, now it's back up here at 6. So I probably would have been trying it from the long side too if it would have got there, but didn't get down low enough for me. It's not really my style of stock, though. We know I like trading the bigger caps. So, this small stuff, I will trade every once in a while for fun. But my bread and butter is trading the mega caps.
NBev, I got a pop. I had a couple different spikes up to 694, and 694 has been the high of the pre-market. I just like to look at dailies like this. And if you go back in October, you had one spike. I would take a look at 665. That was your October 19th high. And there's a pair of highs at 690 and 695. So call $7 your next resistance point after that. But there's a nice 4-day rally here. Let's see if he really important to get through the $7 level. Jar, we had earnings on Sienna, right? CIEN.
Yep.
Spencer,
yes,
can you give us the numbers on Sienna?
I was about to go there actually myself. Q4 adjusted EPS of 53 cents. Sales $1 million, also a $500 million buyback is what they reported.
You broke up a little bit in there, so hopefully everybody heard the numbers there.
53 cents, $900 million was the Q4 report, $500 million buyback in addition to that. It's a fine report.
It's a nice pop. It's a 7% pop for the stock. Its stock was in an uptrend and kind of looking like it wanted to go too. I mean, you can really see separation here. In a lot of different tech stocks. Some tech stocks have just held up very well. They're back near the highs, and other ones are down near the lows. So you can kind of see, there's just been separation here. And this Sienna has had it held up very well in November and December, and now it beats. So a little bit of sentiment maybe, this is a kind of one that held up better. So maybe a little bit more positive view to it. And it's breaking out here this morning and actually going to challenge the 52-week highs. Not a lot of tech stocks doing that.
No, not at all. You did challenge it in the pre-market trading. You snuck your head right at $35. You know how we love the whole numbers here. 35.04 was your high on November 8th. The previous day's high is 34.97, and it really caught a cold though last time it got up to 35. So use that as resistance if you bust through there. Oh, look at the monthly chart on this one, Dennis. What do you think the all-time high in Sienna is?
I don't know.
1,057.
Really?
Yeah.
Is that right?
They must have had some reverse splits or some splits.
I don't remember Sienna ever falling that much. Where was that? When was that?
I got it on my. I got it.
When?
Take a guess when it was.
Like financial. So during the tech bubble, 2000, year 2000.
Yeah.
They must have some splits. There's no way it went from 1,000 like that to 32. Maybe it did. I don't know, but
I don't know. I just pulled it up to look larger.
A lot of things got killed, obviously, but I don't know if that's the case or not. P on this thing is like 7. This is cheap.
I don't know.
Cheap stock.
Spencer, do you on your monthly? Do you see that?
Yes,
I'm just looking at my trade.
I only go back to 2003, and what I saw in 2003, I can see actually in 2008 we got up to $47. I can't see any further back, so I don't go far enough back in my charts.
Okay, all right, Spencer, what do you see? I just pulled up the.
You could be right.
Yeah, so, I want to look real quick. I'm just out of curiosity. Let's see if they've had any splits. They had 2 for 1 in 2000. So that probably helped that one.
Yeah, but they usually adjust the charts. All right,
yeah.
I didn't mean to digress here.
A lot of ratings today. We've already discussed a few of them. We've discussed GE. We've discussed Procter and Gamble. There's a couple, and they're both upgraded. Some interesting downgrades. FireEye catching a downgrade from Morgan Stanley down to neutral. They've maintained their price target at $21, but a downgrade of FireEye. Their site again, it's just a valuation call, as is usually the case with downgrades.
Yeah, Kramer was pumping this one last night. Just bad timing for him, obviously, because stock was trading up to 1975 last night because he talked to the CEO and featured it, and then the downgrade here today, and obviously that's going to trump everything. So that's why it's trading down 2.5%. I don't know. This stock, has held up too, considering, what a lot of the other tech stocks have done this year. This one's held up very well. So I don't think I'm throwing in the towel on this. Maybe, if you are looking at the pullback, the low from a couple of days ago, 1858, maybe a stop out there. But you're kind of in a consolidation period here, but the downgrade's not good for it.
Yeah, and it's had a couple pops. It just doesn't seem like whenever it gets above 20, it makes a high, an initial high of the recently 61, and then some others from there, 2051, 2041, 2010. So, I mean, longer term, I'd rather buy this stock if it closed over 20 a couple times, than trying to buy it, right here at 19 even, or the 2-day low. That's a good number Dennis gave you at 1858.
Moving down here just slightly here right now, making some trades here as we're moving down here. We had some data that came out right at 8:30, Spencer. We didn't talk about that. What came out there, just for my own trading purposes?
Well, we had initial jobless claims, but we also had the ECB cutting.
That was earlier at 7:45 this morning. Yeah.
Yeah, you're right. The ECB.
But give us that.
Yeah, they cut their 18 and 19 GDP growth estimates. They maintained them on a longer term basis, and what was that? The jobless claims is what I
Draghi, 169. Thank you very much. The dragster.
Yes, maintain
the dragster. The dragster.
They maintain their rate. That's the most important thing, and that was this morning. And then at 8:30 we had initial jobless claims that came in a little bit light. So
okay,
that's where we're at.
Let's see. GE hanging up near the highs of the session, 759.
I want to challenge that 8 today. I don't know if they're going to get it up there or not.
Can we do like a parlay bet, Dennis? Can we do a parlay?
What?
Do you know what a parlay is?
No, that's something new.
A parlay is like when you make 2 bets. And in order
Joe's a professional bettor here.
It's not. Everyone knows it.
Is this a horse thing?
No. You can't do it.
Is this a horse thing? Parlay.
You can.
Parlay.
It's a sports betting thing. It's a betting thing.
Yeah. It's a betting thing. And it's like
you know what? It's funny, and I'm just gonna go take you on a little segue before you come back to parlay. I get this from my friends, I'm a gambler, because I trade for a living. And I'm like, I never step foot into a casino. I don't gamble at all. And, but I gamble, I guess, for a living as I make bets on stocks. But I feel like it's educated bets. So I don't feel like I'm gambling here. I feel like I'm employing an edge. But Joel, it's on the opposite coin here because
no way.
He likes his horses. You like betting on everything.
That's the way I was raised. Okay.
Taking a bet. Life is a bet.
No, I mean, you start going to the track when you're 4 years old, I mean, it's not
track.
That's how you learn your math. I mean, a
parlay. Take us back. What is a parlay?
You make 2 bets, okay? And if both bets come in, you get paid a higher ratio. If they don't come in, you lose. So I was going to do a parlay that GE doesn't see 8 and Procter & Gamble doesn't close over 95. But you won't do it. So
I didn't think GE to see 8 today would have to go up another 7% or something.
Yeah, okay. I knew you wouldn't.
Tough run. PG, I don't know where it's going to close. I'm just saying I think it's going to take out 95 in the pre-market, but maybe not. If you're playing it from the short side, you got something to lean on. Just don't miss it. All I'm saying is if you're short Procter & Gamble for the 5th time up here in the 94.80s, eventually it's going to take it out. So just don't miss the offer. I'd be putting my stop at 94.99 because if it gets anywhere near it, it's taking it out. And sometimes I do play them that way. Like put the physical stop on the exchange because you won't be able to you won't be able to be fast enough to do it, and see it go because it'll go really fast. But if you have the order sitting on the exchange, you'll probably get the 95. So if I was short Procter & Gamble and lean on that 95, I'd probably put my stop at like 94.97 or 94.98. If it goes up that high, it's going to take it out. Right now, if we just look Procter & Gamble again, just update 1.1 million there at 95 order.
Okay, Spencer, we did quite a.
Back to the ratings because there were some interesting downgrades on top of the FireEye one. Coke downgraded at UBS this morning to neutral. Intuit downgraded JP Morgan to underweight. They're actually downgrading a few cloud stocks. They're downgrading Intuit and Autodesk this morning. Autodesk to neutral, Intuit to underweight, as I mentioned. I said the Coke thing. Those are that's like the big five. Was UBS downgrading Coke and JP Morgan downgrading a couple cloud stocks. Was there any one of those that interested you the most, Dennis or Joel?
We can do it. We can do a technical on Coke here because it is one that I trade all the time. We got up to 50.02 yesterday. Wow, that was a big move for Coke yesterday. Peeled back off of it though significantly, and obviously they were trading down to 49. I mean, this thing has just been range bound here for the last 3-4 weeks. Gets in the mid 48s to find buyers, gets in the upper 49s to find sellers. I guess you keep playing that until it doesn't work anymore.
50 was a big number. 50.01, 50.02. So you got a big seller. Obviously, we're not going to get, we could get back up there today, but you're trading down at 49. So look at the double close at 49.18, 48.19. Those are the highs the last two sessions. 50 is your major resistance. I'm sorry, the lows from the last two sessions were 49.18, 48.19. So, opening into support, we'll see what happens. If not, you don't have much to lean on. Your 3-day low is 48.47.
Let's do one of the last or maybe the last major notable earnings report of the quarter of the year. Costco was due after the bell today.
Yeah.
So let's look at Costco as we head into that report.
It's getting bid up here pre-market. Typically, I do like to own these things, so it's not surprising. I actually did. I sold it pre-market. But I usually buy these things a day or, sometimes usually the night before, the day before they report, because sometimes you get some positive alpha to extract there from the run up ahead of the number, and I usually sell it before the number. So I don't know going into this one. I mean, Costco, the charts getting towards the upper end of the range around 230.
Yeah.
It's going to have to blow it away. It's going to have to blow it away to go higher. So it's not going to be forgiven. And we've seen some of these smaller, or some, not that's a small one, but we've seen some of the retailers really get crushed here on their numbers. What did Walmart do? When's Walmart do?
Didn't Walmart already come out?
Yeah.
I'm trying to remember if they reported already.
That was a long time ago, I feel like. Let's look up their date real quick. Walmart. It's not coming up for me.
Just trying to get some precedence here. Walmart and Target missed, right? Target got hit.
Yeah.
Yeah. Yeah.
Big.
Yep.
Walmart, Costco, and Target are all the same, but they, sometimes do trade together to a certain extent. And people do think of them and kind of pair them up a little bit. So Walmart, I don't know if they reported here. I feel like they did. I feel like they missed too, but I can't remember. I don't know. I'd lean to the short side on Costco, but it's a tough one.
Let's see here. Let's talk about yesterday's high if you want one target on it today, 230.45. So keep an eye on that. If things get going to the north after the report, there's a pair of highs just under 234, and there was also some highs, previous highs there. So like 233, 234 looks like your major resistance. You're not that far off the low of the day yesterday. The low of the day was 227.07. But a lot of times, you see jockeying, back and forth ahead of the report. So I don't do 30.45, and I don't think you'll see the low of 224. Two things I wanted to mention was how about lows coming out intraday? with guidance. I mean, usually they do that in after hours or pre-market, but they caught some people off guard with that.
Yeah, and it whipsawed and really chopped around here. So if you're wondering what the hell that candle was all about, well, it's fundamental catalyst there, obviously. But man, on that, it went for like 90, went down like 90, then it rallied all the way over 93, then kind of came back to where it was. Is all over the place on that guidance.
Overall, just not a great looking chart coming off that all-time high. I'm looking at yesterday's high as an important level. That's 90. Yesterday's high is just under 94 at 93.74. So let's see if they can take it through that. But looking at the monthly, you had that big all red candle. That was in October, of course, and really trying to recover from that. So good news. I'd really like to see it above 94 for some continuation.
I'm not chasing it, but what about Home Depot off this? So the Home Depot chart is interesting because 3 days ago you had a little washout low there to 167. Now you're up at 174. I mean, if you were trading this for a swing trade, maybe you stop out. Like you can't. I wouldn't want to take it all the way down to 167.
No,
I guess it's just tricky because you almost gotta, and to still because you're still holding that key support area. I guess there's no trading here either. But the low's got the pop. When's Home Depot due to report? Are they coming up? Or did they report already too?
No. Everyone is pretty much out of this.
Pretty much everybody reported.
Yeah, Home Depot was November 13th. Walmart was November 15th.
I have the goldfish.
Everyone's out. Everyone's done.
All right. So there's nothing. I don't know. I guess you just sit on hands on this one.
How about DVMT? Just through the spinoff, or did you
still have it? Yeah, I get it. It's done. So they approved it. It's going to become Delta. It's going to become Dell. So you're going to get shares of Dell again. So here we went full circle. I've had this for my portfolio for a decade. I own Dell. Then they gave me a bunch of cash and they gave me Dell Technologies, which was supposed to be a tracking stock for VMware. Now they're taking DVMT off the board and giving me back Dell shares. So anyways, I have no idea if I made or lost or anything on this, but because I owned it for so long, I think I bought Dell back during like the financial crisis, and I was down in it. And I don't know that I was up in some of this. It says I'm up in the DVMT, but because it did the cash and all the other things, I don't know if I actually am. Anyways, I held this thing forever. So I've held it literally forever since it's been DVMT. I've owned it the entire time in my investment portfolio, which I don't even know when this thing came out. Anyways,
you don't want to sell it because you don't want to figure out your cost basis, so you're just going to hold on.
I own it in a retirement portfolio thing, so you don't have to worry about taxes on those. It's called RSP in Canada, which is equivalent to like an IRA, so I don't have to do the taxing on it, which is nice. It'd be a nightmare to figure it out. You're right, Joel.
Just hanging up here. I mean, I don't know what the transition, what you're going to get for stock, but just, technically it ran up to an all-time high, and then it's just kind of holding there, just kind of consolidated. So if it takes out that 3-day low, 102.61, I could see some downside, and you seem to have good resistance, from 106.70. I see 4 highs in the upper 107 handle. If it interests you, taking it off before it goes off the board.
Well, yeah. So I don't know what the final number was. Yeah. I can't remember. Maybe if we could probably go look it up, but I don't know if I look it up in time. I thought it was like 107 or 108 or something. Anyways, but it's not because they're giving you Dell shares too, so it's hard to figure out.
Okay. All right.
Be becoming Dell, so you're banking on Dell going forward if you're holding through it.
Okay. All right.
With some cash, though.
And VMW is up near its all-time high as well. The all-time high in VMware, 168.
And that's the disappointing thing, because this was supposed to be a tracking stock for VMware, and it didn't track it well at all. I think, at the end of the day, it's trading obviously at a significant discount to where VMware is. VMware is $162. This thing's trading at $105. I mean, it traded, and that was why Carl was fighting it too. Icon was in there kind of fighting it too, saying it didn't even try. It didn't do what it was supposed to do. And now, all of a sudden we're, looking at this and, anyways, it is what it is. So it's just a disappointing investment. I feel like I kind of got screwed by Dell originally in this, and they're probably screwing me again here somehow.
Okay. All right.
That's my opinion.
All right, SPOO's right back up to mid-range on the session here, 29.60. This is basis the December contract. GE backed off that 10 cents off the high. So just let you know, the pre-market high in GE is 762, currently trading 750. So, see what happens. If you can get above 750, maybe we'll make it 760, make a challenge at 8. Procter Gamble showing life again. That just must have been an odd lot that traded it unchanged, right, Dennis? Yeah.
Those are just old crosses.
Old crosses, yeah. So
not FINRA. When you see FINRA on the tape, sometimes it's just a late report. Sometimes a cross and the close. You don't know. This was always the argument. You get market structure talk here. We're not going to run out of time. Is there's not enough information in the FINRA tape. 35% of your trades are happening off exchange, and they just blanket them all FINRA, trade reporting facility. We don't know anything more about that. I mean, there's so much that encompasses there. Let's give us some more details. Let's have the SEC some details on some of this stuff. See FINRA, we know it's off exchange. We know, it's maybe an institutional cross, or it's something going on, or, maybe it's an off exchange market maker. You don't know. There's so many things that go into that, and there's no way to determine it with just seeing blanket FINRA for 35% of it all. Let's break that up and say, hey, this was Citadel, or this was, another off-exchange market maker, or this was, across a LiquidNet, or this was let's break it up and let's understand it a little bit more as to, if Citadel wants to do 20% of the volume, well, we should kind of know, when they're actually there, how many of these spinners are Citadel? A lot of them. But it'd be nice to break it up a little bit more. I mean, and that's, Citadel is I think it's your number one market maker here now, obviously, and especially off-exchange market maker, taking, the other side of almost every retail order, every marketable retail order. So, I mean, let's see some more detail in this FINRA tape, and that's something they should do.
All right, Dennis, you're going to be fired up because you got Joe Saluzzi coming on tomorrow.
Yeah, maybe we can have this conversation and pick it up with Joe.
Oh,
Joe's great.
Oh, great.
Okay.
a whole show of Dennis ranting about FINRA. No, I before we go, I want to update, or I should clarify real quick that in that GE note, JP Morgan did say that they see upside risk of $8, downside risk of $5. So I guess a range of 5 to 8 is what they're seeing for GE. I mean, we're there this morning, essentially. But anyway, wanted to clarify that before we sign off for the day, but that is going to do it for our show. So thanks for listening. Thanks to Marc Chaikin. Thanks to all of you in our chats, both on YouTube and premarket.benzinga.com. Don't forget about our podcast. We're on iTunes, SoundCloud, Stitcher, TuneIn, and Google Play. And please remember that all the information from our show is for informational purposes only and not meant to be invested advice. Yes,
Spence?
Yes.
Yeah. Oh, I'm sorry. You know what? I know, Dennis, you're going to hop off. Spencer, you can hop off too. I'm just going to stay on here and see if we get any more out of the YouTube or the pre-market chat, and I will just do
Ticker time for Joel.
Yeah, let's do a little. Yeah,
bonus time.
Spencer, I know you're super busy over there, so I'll let you hop off. And if no one has any questions, I want to talk about Apple real quick because really a nice technical setup here. A lot of people are looking for Apple, to make a big rebound here. And what I noticed about Apple yesterday is, when the S&Ps had that rip late in the day, it really struggled at yesterday's high, or the 2-day high, which was 171.79. And then, so yesterday's high was 171.92. So if you're looking for another kicker, to really get this market going, your second biggest component in the S&P is Apple. You need that along with some of these lagging financials. So really keeping a really close eye on 172 there for your Apple traders. If you're short, it goes through that level. You got a lot of room up to the 175 area. Coming back on the downside here, kind of kicking myself because you had a low, your 3-day low, which was the low of the move at 163.33. You had a high of 171.79 until yesterday, but still the 50% retracement of that rally comes in at 167.50. Your 2-day low here is 167. So keeping a real close eye here on the Apple consolidation. Yeah, Bob, you may, if you take out 167, The only level you see is 163.33, but there could be some other stops in between there. But just interesting. Apple clears 172. I think you get another nice shot to the upside. And if you break through 167, I don't think it's going to be as easily, easy like it was when it went 163.33. Also, someone wants to take a look at Tesla, and I mean, this stock has just held up extremely well. And I know someone made a comment at the in the chat yesterday that it was kind of lagging. It kind of wasn't participating in the rally. But come on, look what the stock has done since the market bottomed. In October, this thing is tacked out over $100. So maybe there's just a little bit of rotation. Interesting day yesterday. Pair of highs at 372. You're currently trading at 371.27. So as of now, you have a seller lurking here at the 372 area. That's your resistance. Since you're trading up, I'll just give your support at the close at 65.60. And then we all can look for a target when things got a little out of control back in August. The high of that move was 387.46, but I'm sure some people have some intermediate targets ahead of it. But for me, keeping an eye on the pair of highs here at 372. Let's see here. Freeman is asking, Joel, since you're doing bonus time, can you please explain how you knew that if Amazon did not hit 17.35, it was going to give back its gains yesterday? Well, first of all, Freeman, I didn't know. I just like to look at retracement levels. And you had a rally off the low of 14.20. This is pretty simple math. You made a high at 17.78.35. And actually, I was doing it from the all-time high. I was doing a 50% rate retracement from the all-time high. So that's where 735 is off number. I did trade through that on the rally, but you only had one close above it. So nothing tricky on the math there, Freeman. It's just when I see longer term moves in a big stock like that, I like to look at the 50% retracement for potential support or resistance level. DC wants to take a look at RTN. That is a defense stock here coming off the bottom. DC, I'd really like to see it take out 175. Pretty simple here. You guys can tell I like double bottoms and triple bottoms, and the same with tops. 174.83 was your high from yesterday. 174.85 is your two-day high. Both times that you got up near that area, you really backed off. So keeping an eye, major resistance, no leg up until it takes out 175. Coming back on the downside, it closed near its low. I'm not sure if it's trading up with fair value on the market, but be prepared if you lose this 171.54 level. Your two-day low is at 169.69. Let's see here. Thank you, Spinner. Tesla. Baird ups price target on Tesla. That's a good thing. Cajun 1, XRT for a Christmas rally. I'm going to get Ryan Craver on again because the last time he's our retail expert. I don't know. Is it getting kind of late for a Christmas rally here in the retail sector? I mean, it's gotten really beat up. Comparing it to the overall market, it really hasn't come off the low of the move. Once again, I'll just give you a level on the upside I'd keep an eye on. Let's call it 44.25. That flanks your two highs from yesterday, 44.18, 44. Trying to swing trade here. Like about the bottom that it made this month at 42.65 is you also have three other monthly bottoms in that area. Those monthly bottoms came in December of last year, February of this year, and March of this year. So XRT did hit a long-term monthly support level. It's just a question if it could, get get off the mat here, but did hit some good monthly support here. So wrapping up here, it looks like we are out of tickers here in both chats. Pre-market high, 2670.75. That's a nice target. Above that, yesterday's high, that's another 16 handles above. Coming back on the downside, your pre-market low, 47.50. That kind of coincided with your late day low in the S&P's 47.25. Underneath that, I don't see much support down to yesterday's low, 31.75. Folks, remember, this is rollover. The volume is now being split between the December and the March contracts. So you're going to get a little bit more choppiness in the futures. Calling for that inside day to day. We'll see what happens. We will join you guys all tomorrow morning. Thanks a lot and have a great day.